Poker cards are waiting.
You guys, welcome back. I have made it here with Bubba once again. We actually missed our window this weekend due to Mother's Day, so we're doing a little catch up here. Bringing my man. He's had some incredible trades, doing some amazing things, and actually he's off to a poker tournament shortly after this. So we had to do this at 1 o'clock so he could get to the table. Bubba, how the hell are you, man?
I am doing great, and you know it's funny. I read the trade plan this morning, and I saw I got to buy at 74.20. They're 74.73 right now. What's going on here, baby? 50 and then another buy at 73.99, which was the dead low.
I know. Yeah, that was the other one in the trade plan that worked out great today. I've been telling everybody to be super patient. We had 2 weeks there. We were kind of grinding up higher, and people were really starting to lose their cool. Some of the newer traders or whatever. So I'm sure you've experienced this, right?
No, I never experienced this.
Well, this is so like summertime trading came early.
It's hard.
Yeah, this is the worst. This is the hardest.
When markets are slow, it's bad for traders because traders think that they have to be active. They don't understand that they can go to a poker tournament and play. Well, and listen. Now again, from my floor days, when it was slow, by 10 o'clock we were on the golf course.
Yeah.
If I miss something that gets busy, so what? You're not in this business for one day. Okay. You're not in this business for one trade. If one trade is going to make the difference in your life, you're in the wrong business. Okay. You have to think of this as a grind, just like you grind it out on a daily basis. Yeah, you get some nice winners, 130 points, 3 times 45, whatever. But at the end of the day, you're not going to miss anything. I think one of the things I look at, and one of the things that would concern me, is with this big rally and this big recovery, the VIX has been pretty strong here. It's a little bit lower. I think it's below your
not wrong
level.
You're not wrong. There's some weird dispersion there going on right now.
So, what do you think of that? I mean, I said, I spoke for an event in Palm Beach on Friday for Tradier. I got back and I looked, and Friday the markets were up and the VIX was slightly higher. Monday the markets were up big and the VIX was up pretty solid.
Yes.
Now the markets are up and the VIX is pretty flat. So to me, I go, look, I'm not going to try to stop this market. I'm not going to get in the way of it, but I certainly feel that there's a hell of a chance that we're going to see a pretty stiff sell-off in the next couple of days. What do you think?
I think it's certainly possible. I mean, we are absolutely, without a doubt, overextended and out of value. But, you and I both know just from, being around for a long time, this thing can go as high as the fuck it wants. Like, it doesn't have to roll when we think it's going to roll. It will roll, right? But we don't really know how far they're going to take it outside of value. When people stop shorting, that's when it'll go. So I actually have an imbalance. I don't know if you like this. I have a bullish imbalance to 75.09. The weekly profile last week said that basically we didn't have any value area high on last week's profile. So, I measure the move out or whatever. And basically, in order to make this quote unquote efficient, we need to go to about 7,500. What do you think? Possibility?
I agree. I mean, again, look, there's no reason to ever step in front. People who believe they have to buy the high, sell the high, or buy the low,
it's crazy,
are going to lose.
Yeah.
Because they're not going to make enough. If they sell the high, they're going to take their profits way too quickly. If they buy the low, they're going to take their profits too quickly. Listen, we're not stealing anything. We're doing a good job at judging the market, and we're putting probability on our side. We're basically playing a math model. Okay. You talk about it every day. Your positive gamma, negative gamma, VIX. These are all things that mean something to what the overall markets can do. But you're going to look and wait and not do anything until you get to your levels, which is what I'm trying to do. I'll have some trades on that are neutral based that will benefit. I had neutral trades that are now long because the market's going up. But if the market had gone down, they would have turned to short. But at the end of the day, look, I hate the market up here. I think it's way overvalued. I think it's way overpriced.
Terrible.
Guess what? I'm long and I don't care. I'm not getting out.
I mean, what can you do, right? You don't fight it. That's the thing, right? Like, you just trade the chart. I think last time we talked, I told you, like, I have tried to put it out of my mind what we're actually trading, because if I think about it, I'm like, I can't, I get paralysis, right? For me, I'm just like, it's just a chart. I just have to trade it for what it is, because it doesn't make sense. It doesn't have to make sense.
You got to trade it like poker. It's just chips. It doesn't matter how much the chips are worth. It's only, if it costs you 3 chips to call. I think, the one thing I am fighting in here is crude oil. Okay, now I know you don't trade as much crude and all the other stuff, but
I'd love to look at it.
I think that crude is so overvalued, even at 103 or 102 where it's trading right now.
USO or CL?
What's that?
USO or CL? What are we talking about?
I trade CL. I have a position in USO too, but I'm really trading actively CL, and I've been selling it. I mean, I've been shorted from 115 and continue to short it. I've taken some heat backwards going back, but I'm going to continue to fight this, because this is a news story that has pushed it up. This is a fear trade, because if you look out in the future where crude is at, it's much cheaper than it is right now. So
are they still?
I may be wrong, and I do have a point that at some point I'll take the loss.
Is there backwardization happening right now on the other?
Tremendous backwardation. We're right now. If you look out into December crude is $81.
Okay.
So I'm going to fight that market again. Don't listen again. When I say fight, it doesn't mean that I won't take a loss somewhere and then re-enter, but I'm going to be on the short side when I believe this will collapse and go back down to 70 or 80, in my opinion. Now, I could be wrong, and listen, I might lose some money. I mean, I lost some money in fat cattle. You know all about that.
It happens.
Those prices don't make sense either. But I finally said, okay, that's enough. That's enough losses there. I take the losses. I'm going to move on. But I think that's another big thing that you teach is you take your loss, move on. There's always another.
It doesn't matter. It's just, it's just part of what we do, right? Like, the losses are a cost of doing business. Like, we don't have to pay rent. We don't have to have inventory. You take a loss. It is what it is. So I want to show you something that I'm looking at, and this is for crude. And me, my edge is in the edges, right? I trade the edges, right? So, I was wanting to short this 112.95 area, call it 113, didn't quite get there. I also have a long down here that I like at 82. And when we look at the volume profile, I mean, we are essentially right. This is what I call the fuck zone. I don't know what you call it, but there's no edge in the middle, right? So, it could go either direction. It's any man's game, right? And so I call this the fuck zone. POC is basically fuck zone, whatever. So we're still very much within the value area. And just looking at it for me, I mean, just from a volume perspective, you can see, again, I kind of like these edges here. If it'll happen, I think I'd be willing to sell or buy either direction. As you can see, I got an alarm down here already. It was waiting. So
I agree with that. I got no bitch with that. I think that looking at that, it's basically dead nuts in consolidation and not going anywhere.
Yeah, I mean, it's crazy.
It's going to break out and at some point. So when you look at it, I know you liked Lululemon. What's going on with Lulu? Is it time to buy yet?
It's funny. Did I send you a text, or did you got an alarm set?
We were talking about it, and I was waiting for you to tell me it's clean and ready to go.
Well, I don't know about clean and ready to go. We're in the spot. So it's funny. I actually just got my fills today, and again, I am not balls deep on this thing, right? This is a complete starter position here. The real trade for me is to get back above the COVID low, which is the 128.85. This is my last level of support here. It goes all the way back from 2020. Okay, so we're talking about almost 6 years old at this point. 5.5 years. No, 6, yeah, 5. Let's see, 5. Almost, yeah, 5.5 years old. So I like this area. I actually just got filled on a small starter position. I got 35 shares here, and I'm not really interested in adding any more. My trade is to see this hold and get back above that COVID low. I truly believe that if we reclaim that low, that we will squeeze promptly right up to 155. So, am I a little early? Probably. For me, it's I'm not in a crazy big position, 35 shares. It can't hurt me. Right. So it's like, I'm not, 1,000 shares deep or anything. But the moment they reclaim this low here, I'm going all in. I promise you. I'm pushing all the chips in the middle on this one, bro.
Will you use options at all on this trade?
I will. When we finally get up here, I finally will. And speaking of, you'll be proud of me. I thought about you on this. So check this out. You'll like this. So, and we'll come back to this, but I want to show you this. And you said options. Check this out. So we've talked about Bitcoin. I saw that you were talking about it in your Market Mavericks, right? And you were talking about, you had me on and you asked me, hey, what's the resistance? What do you think? You had somewhere around 81,000, I think. And I said, yeah, I got something similar around 82,500, right? And so this was the long that I took at 60,500, and I got flat here at 82,500 and actually flipped short. So on IBIT, I should have done futures, but I didn't. On IBIT, I actually sold call spreads, and then I bought some puts, but I paid for them with the call spreads. So that was kind of nice. So kind of nice little free trade off of that. But this thing's starting to get a little love off of here. We tapped this twice, 82,500. I have the exact spot that I was, when I called it in the room about right here. Literally, we were right here. And I think this has got a lot of potential to really come down from here. We'll see. I mean, could they continue to push higher? Of course. And we don't really know, right? But, I took a poke. And so far, I've already taken, I took 60% on 5 call spreads right now. I don't really trade those too much. So I took 60% of the profit, closed those out. I've got 5 left, and they are 75% in the money so far. I was basically going to get out of them when they were worth a dime. So that's where my resting orders are sitting. And then I've got I got 5 puts that I'm just,
with IBITs every other day expiration.
I didn't know that they have that.
You may want to sell some spreads above your spreads and below your spreads.
I didn't know they had that. Okay.
You do them like they have Monday, Wednesday, Friday. Okay.
Okay.
So you could sell some on Monday for Monday, right? And pick up some spare change where you're sitting around doing nothing.
Well, that's a great idea. I didn't do it because, well, first off, I didn't know they had, daily expirations or every other day, but I didn't see a whole lot of juice in them. There wasn't a whole lot of money there for me. So
but you know what I teach my guys?
I followed your lead.
If I can get $20 per contract extra 5 days a week or 3 days a week, and I've got 5 contracts, that's $300. Now you can leave that $300 laying in the street, or you can pick it up with your little broom and dustpan and put that money in your pocket. That's what I want to do.
So
we do that every day against our open positions, whatever trades every day. And speaking of every day, I hear that markets are going to 24/5 by the third quarter.
Get out of here.
And 24/7 by the end of the year.
24/7? What is there's not enough time to degen out in 24/5 or what?
Well, I think what they want to do now is because of obviously Bitcoin was the leader here.
Right.
Even though the currencies don't trade on an active exchange, they're 24/7 because there's places that you have to exchange money at. But I think South Korea wants to be a much bigger player in the U.S. market and other overnight markets, Australia. So they're going 24/5 for sure within the next 4 months.
Yeah, that's crazy. By the way,
I mean, that's every broker. Right now there's a few brokers that do offer that, but that's every broker. Okay. And of course, the good news for options traders and day traders is the FINRA day trading rule comes off June 4th.
Well, that is going to be sweet. My question is, though, are they going to, if the markets are open, let's just say 24/5 for now, stock market, right? Is that every stock? And
every stock, the entire market
is going to trade, or is the options market going to be?
I think the option markets. I know you don't trade a lot of options, but the SPX has multiple expirations daily. They have a morning expiration and an afternoon expiration.
Correct.
And I think that what's going to happen is they may break the regular options world into 3 separate expirations daily.
Okay.
And then they have one massive expiration on Fridays or on the quarters. When I first started trading, we only had quarterly expirations. We didn't have monthlies. We didn't have weeklies. We didn't have dailies. Okay. So I think they're going to create something like that where they have one mass expiration, whether it be weekly, monthly, or quarterly. But on a daily basis, I think you'll have a 4:15 expiration like we have now.
Right.
Okay. Probably, let's say a 10:15 or a 12:15, and then again 8:15 in the morning. So something of that nature is because they're going to have to expire these options. They can't run forever because that's where's the premium going to come from then?
Well, That's one of the juicy parts about the futures options. You can get out in the middle of the night. You know what I mean? That's
exactly.
So I didn't know if they're gonna run the stocks, overnight.
No, I think they're running it all. It's going to be every stock, every market, 24/5, and then 24/7.
Right. Yeah. Yeah. Bob, we got a guy on the stream, Bob, he always attends, and he was like, I said something about degening out, and he's like, amen. Like, let's give people more opportunities to degen. Right. And I wonder I remember you and I talked last time about how big the prediction markets are getting. I wonder, I know CME stepping into that. I wonder if that has a lot to do with them wanting to run things a little different.
Oh, I'm sure. You know that Trader Brokerage, which is who I use for options, and the reason I use them, they're great. They got great service, but they're $10 a month flat for all your trading.
For Trade-Year, yeah, I know, it's amazing.
But they're starting the prediction markets in June.
Oh, no way! Are they going to do their own?
They're doing their own.
Get out of town!
Yeah,
and they have a stick.
And Coinbase started prediction markets.
Yep.
So you got Kalshi, Coinbase. They're all going to be in it because it's a CFTC product.
Yeah.
So, why not? People, listen, I think traders going to get into sports too, gambling.
That's crazy.
Because that's very big in the prediction markets.
So Bob asked a question. He said, what about time to settle, real time or next day? Do you know what he's talking about?
Yes, I think it'll be real time settlement when they expire them. Okay, like used to be, you settle. And I think what's going to happen also, Bob, is that instead of settling through expirations and through stock delivery, I think you're going to start to settle in cash. So if you're up, you're up. If you're down, you're down. But no, I think, now this I don't know. This is a guess. But I think everything's going to become cash settlement because of the assignments and the exercises. Okay. You can't do them that fast, right? But you could, I suppose. But I think they're going to go to cash settlement, which started, cash settlement started in the OEX back in the 80s. Okay. And now the SPX is cash settlement. Okay?
Yeah.
So I think options are going to go to a cash settlement market, which is better for everybody because nobody wants to deal with that bullshit exercise. I don't mind it, but if you're going to be open 24 hours a day, there's a lot of paperwork and a lot of things that have to be done, and plus the fact that traders are going to have to be more attentive because and who the hell wants to be up all night, right? You want to sit there for 24 hours a day, 7 days a week in your chair? No, you want to go to the gym, you want to do your thing. So I think what's going to happen is these will go to cash settlement. So if it would have been an exercise and a loss, they'll just take the loss in cash and paper and move on.
Yeah, and that makes sense. That's easy. It's easy enough. That is one of the sexy things about SPX as well. You don't have to worry about early assignments and all that other jazz.
Yeah, well, they trade European style. But again, if you're trading properly, it shouldn't matter whether it's American style or European style.
Right.
If you're covered up, remember this, and anybody who trades options, if you have a position on, let's say you have a short call spread on, and you get assigned on the call, you still have the long call to cover it up. So you still have the same risk you had when you put the trade on.
Yeah.
But something is dramatically changed if you do get assigned. And what's dramatically changed? Your profit potential went from fixed to unlimited. So what could be wrong? Why are so many people upset about being assigned when it's to your benefit? Look what happened today. What if you were assigned long stock last night in the spiders? Okay, just right. for example. Okay, you had the call covering it up. Okay, the put covering it up. So now the stock's up $5. So if that ran through your spread, you're making dollar for dollar and still have your same protection you had on before. So what's the worry?
I think a lot of people get upset about tying up the liquidity.
Well, but if you're tying up liquidity, or if you're in an IRA, which happens, then you only have an hour. But still, have you ever seen a market? Maybe you get assigned on a Friday. You ever seen it come in on a Monday morning and the market's either down huge or up huge? And if you have that option covered up and it's really synthetic,
it doesn't matter.
Then you're going to make more money.
Yeah.
That's the point. You get the opportunity to make more with the exact same risk you had when you put the trade on. Yes, it takes liquidity away from you. But in today's market, the minute you liquidate the stock, all the liquidity comes right back.
Yeah. The only thing is, like right now, I don't know what Spider's at, right? But just hypothetically,
Spiders are at $742.71.
good night. Are you serious? Oh
How about this? When did you ever think in your life
stupid
that the QQQ would be more valuable than the Spider?
Did it what?
That the QQQs would be more valuable than the Spiders?
I cannot believe the NASDAQ, to be honest with you.
I mean, they're going to be at current pace. They're going to be more valuable before the year's over. Right now, the Qs are trading at $714. They're $28 behind.
No way they've caught up with it this fast. I don't ever look at them. Okay. Wow. That's insane. And the NASDAQ's already 4 times higher than the ES anyway. So the fact that it's gaining on it, that's an insane push up. That's incredible.
It's an amazing thing. It's an amazing thing when you go back to 2008. Right now, let's say the Dow is worth a Dow full contract is worth 250,000.
Yeah.
Okay. A S&P contract is worth about 390,000. Okay. Think about that. I trade that spread in 08 at the bottom. The spread was inverted, and the Dow was worth more than the S&P.
Okay.
How about that?
That's crazy.
So
that is crazy. Well, we've seen exponential growth since COVID. It was even since 2008. 2008 was insane, actually. Did that whole, so like, let me tell you something that happened with me during COVID. And I don't know if you had a similar gut feeling like during 08. Maybe you didn't. Maybe you're a flawless trader. I don't know. But, when we had the whole COVID, dump ordeal, we came flying out of there so fast that I anticipated a lot more resistance on the way up. And as I know they kicked on the money printer and all that, but we were all locked in our houses. I couldn't figure out why the market was just absolutely in rocket mode, right? And I was trading more of my opinion than the chart at that point in time. So I'm like, this can't be right. This is impossible, right? Especially after we made new all-time highs. It's like, okay, let's bring it back a little bit. And they never did. So did you have the same kind of issues in 2008? Because it was a little.
I had some issues in 2008 initially. I mean, I figured out that it was there was a short squeeze, but I was fighting it until it got back over 10,000.
Okay.
The Dow. I'm not gonna lie to anybody. I tell like it is. I got roasted a little bit. I was short. I was short some SPY stock. I think it got down to $90, and I was still short at like 130.
$90, huh?
Yeah,
that's insane.
I mean, again, this is the whole thing. But the thing that you should always remember, and everybody should remember, when you get those events like even 87, but I'm not. Most of your guys are not old enough to remember 87, but 2001, 2008.
Yeah.
And those when they punished them, that was the time to step in front. I wrote an article in March of 2009, the short squeeze that saved the markets.
Yeah,
which is exactly what you had.
That's what happened. Yeah, for sure.
But again, I took it up the ass a little bit. I'm listening.
It's true.
But when you recognize, and I think this is we opened up with the VIX. I think it's important to recognize when the VIX gets a major spike like it did in 08.
Yeah.
Okay. That's telling you that everything else is pretty much overvalued. And even though the market really didn't bottom until 09, everybody who bought options in November lost money on the options they bought, because even though the Dow came much farther down, they were paying for more than it was actually worth.
The vol, for sure. Especially with VIX at 60, implied vols are out the ass. I mean, it was.
So again, when the volatility gets too high, I always warn everybody: don't chase it up. Learn how to sell a spread, or learn how to spread the market, because you can create the same position you want with if you want to buy a call or a put. You can create a synthetic call or a synthetic put, and not overpay for the juice.
Well, you and I have talked about this before, and so we caught the bottom yesterday in ES. Okay, we were actually long literally from 73, 64, 50. We had it was perfect, right? And between yesterday's low and then again today, and I'm just going to throw it out there, we came in today with relative volume at negative 30%. Okay, I mean 30% less players than normal. We are still looking at negative 10% relative volume taking us through lunch. I'm looking at the size of the orders that have basically produced this move that we've had from today, which is essentially the low at 73.99 to the current where we're at now, 75 points. They have been pushing this market up consistently on no volume. It's no volume, low volume. I know it's got to be some sort of weird gamma squeeze, whatever it is, but it's just very strange to see this market.
You want to know what I think it is?
With no players.
You want to know what I think it is?
Go ahead. Let's hear it.
No, this is, to me, in my opinion, J.P. Morgan, Goldman Sachs, and Citigroup are sitting on the sidelines. They're waiting to pound. Okay.
Isn't their collar isn't it way below us right now?
Right, but they're letting the retail trader go to town right here. All the pension funds, all the 401k money. That's why there's no volume. So I think that the big players are sitting it out, waiting, and they're getting ready to pounce. Okay. And I don't know where they're going to pounce from. I think when they feel, and very much like what you point out every day in the trade plan, I think when they feel when the gamma is negative enough and the volatility is positive enough, I think they're going to fucking scram them. And I think that they're going to hang out everybody to dry that's been buying them up all this way.
Well, I got to tell you, and this is from a day trading perspective. What's up, Bryce? Good to see you on here. I know Bryce, this is the guy in my room. He's absolutely.
What's up, Bryce?
He's an absolute killer. And anyways, one of the things that he's coming to learn is that when we monitor the volatility, the GEX levels, and we understand where the positive, negative gamma is, he's really been understanding that positive gamma regimes are slow, boring, no volatility. You climb up. Yesterday, we had the first opportunity where we had negative gamma above us. We had a huge range yesterday. Right. We had volatility, huge range. Basically, we made money both directions, which was awesome. And so, like you said, I think the gamma, the options players and the gamma strikes, for you, what you were just bringing up, I think monitoring that and where these players are starting to position, that will give us a great indication of when we need to start looking for the downside indication. I mean, right now, I trade my process.
Let me ask you a question.
We're up on support everywhere.
Your process works as good as anything I've ever seen.
Well, thank you.
Why would you change anything different than your process?
No, I'm not saying that. But what I'm saying is that right now it's pointing up. But every time yesterday it was pointing up too, and we had the gamma flip above us, and we ended up selling off to come to the leg, only to come higher. It's just really interesting how these are such huge tells for us in this market. I never really cared about options levels for many, many, many years. It's really something that I've incorporated into my process over the past 24 months. And I've noticed that the options, and I don't know if it's because
the options are faster than the futures.
The zero DTEs are playing a huge effect on this market right now.
Well, you know why, right? You've got all the guys doing the reversals and conversions against the futures, and they have to secure the options first because they're less liquid than the futures.
Okay.
This is what the old Susquehanna and CRT traders used to do back in the day before everything was electronic. But if you watch, the options will move first.
You move the market by grabbing a lot of options for sure.
Yeah, but you can also, if you want to trade futures and you're looking for an entry and you say, here's my entry, I'm not sure yet. If you look over the options, you see the options start to tick up. That's a good spine for your entry.
That's a good point. Yep. You think the options see it before the futures?
I think it's not that they necessarily see it, but I think the guys that are controlling the market, I don't mean control like manipulating, but the guys that are trading the big size, that are creating these reversals and conversions, which is what they're doing. Okay. I think that they have to secure the option side of the trade first because it's a much tougher side to get both legs of an option. If they're doing a conversion, they're buying the call, they're selling the future, and they're selling the put. Okay. And if they're doing a reversal, they're doing the opposite. So I think that they have to secure both sides of the option and make sure that they have a big enough edge so they can go right to the futures market. And because the futures market is much more liquid than the rest of the markets, I think that's what you're looking at.
Bob says, what about leveraged ETFs?
Leveraged ETFs, in my opinion, are horseshit. They have value on a 10 to 15 day basis, right? You want to trade like a nugget or any of those leveraged products, they got about a 10-day life shelf. Because again, if you look back, for example, there's one ETF out there, FAZ.
I got you, Bob.
It's trading at about $10 right now. Okay, maybe less. You know what the split adjusted value for that is if you go back to 08?
What's that?
$6.7 million.
What do you mean? Head back up.
Per share. Put up a chart. Put it up. Put up FAZ on a lifetime chart. FAZ, Foxtrot Alpha Zulu.
Okay.
Okay, and put up a 20-year chart.
Do you think options buyers and the leverage ETFs? Do you think that has anything to do with? You think it's as powerful as just like the standard SPY or VOO?
If you're right, it's more powerful.
No. I mean, as far as influencing market behavior.
Not as much, no.
What was the stock ticker?
FAZ, Foxtrot Alpha Zulu.
What is this?
It's a triple leveraged on the banks. What's it trading at right now?
$46.
Okay, they just resplit it. Go all the way back. Go back to 2008. Can you go back that far?
Yep.
What's the price?
Oh no, it doesn't even go back that far. I have $60,000.
No, that's $6 million.
Oh yeah, you're right. You're 62 million. You're right. Yeah.
Yeah, 6.2 million.
That's crazy.
So leveraged ETFs are great for short-term trades.
Well, they rebalance them constantly, so you can't
rebalance, and they don't trade like a normal chart because they're using a multiplier.
Yeah. And don't they rebalance them every night and every week or something like that?
And they keep stealing the fees from you.
Yeah, for sure.
Anyways, they're great for a short-term trade, but not for holding for long-term.
Yeah, I mean, I've known some guys that like during when the Q was really pushing, that some guys were long they were long, and he was like, "I'm just going to sit in my retirement account." And I'm like, "You don't want to do that. Like, get your money and get out."
You'd be broke if you sat with those in your retirement account. All right, I got to go play poker. But
hey, thank you so much for joining.
Listen, to me, this is the most fun that I have, bullshitting about markets with a guy who understands it and plays it. Look at that.
See you later.
You want to give me a black cat before I go play poker?
That's my homie. It's good luck. Good
luck, brother. All right, everybody have a great day. Be careful, be patient, and don't piss your money away. It's too hard to make it.
Man, tell me about it. You have a great day, and I'll see you soon. And I'll be on the show Monday. And
Monday night.
Before you get off, what day you want to come on?
Any day. I'm good every day for you, brother. Not today, but
Here we go. I'll tell you what. I got somebody coming on tomorrow. Let's do next. I'm coming on you on Monday, so why don't you come on mine on Tuesday?
Done.
19th. I'll see you.
All right, guys. Have a great week, everybody. Have a great day.
Be good, brother. Cheers.
Bye.